all right. What's good, people? Y'all know what it is. Y'all know what it is. What's happening? What's happening? I'd like to welcome everybody to another episode of Financial Bars. It's your host, Don Bucks. What's happening? What's happening? I see you, fam. I see you. I'm in the building, tapping in. Hey, first and foremost, gotta give my disclaimer. I know how I'm coming. First of all, I'm not a financial advisor. I'm not a fiduciary. I'm not a money manager. None of that, right? So, by watching this video, you are agreeing to my disclaimer. I'm not liable for your wins or your losses if you was to take advantage of any suggestions that I might give tonight or any other night. So, by y'all watching this, you agree to that. So, what's happening? What's happening? What's going on with you? I figured people would be at a lot of people at Cigar Sundays right now. Speaking of Cigar Sundays, I don't know if y'all tapped in last week, but I was fresh from Cigar Sundays last episode. I was fresh from Cigar Sundays. I think I was a little bit under the influence. Like somebody told me, like, yo, what was up with you last week? I got my stuff off. My information was right and exact. But I was a little wavy. So any, Bible thumpers that got something against that, man, hey, forgive me. Sorry, not sorry. Feel me? But yeah, so this week, man, I've been hearing a lot of stuff, right? So I'm gonna start by this, giving y'all this story, right? Now, I got a friend of mine that his educational level stops at 6th grade, right? So it's interesting that this guy, now see, once you start moving down a different path that's unfamiliar to people, you're gonna have your naysayers, you're gonna have your people that just want to argue with you for the sake of arguing. And that's what this guy does. For some reason, he like to disagree with me just to be disagreeing, right? But I refuse to argue with people that don't, how could I put this nicely? I mean, I love the brother, you feel me? But you can't argue with me about something that I know. Like, let's say, for example, you're a mechanic. I'm not about to come into your place of business and tell you how to fix a carburetor. Like, that's what you do. Like, I'm not gonna come in there and just be disagreeing with you, thinking I know more than you about cars. I don't fix cars. Me, I play with stocks. I play with business. So you're not about to come in my lane and tell me about what I do, right? So just keep that in mind. Once you start moving down the path of building wealth and dealing with stuff that people are not familiar with, you're going to have your naysayers, you're going to have your people that disagree with you. Just keep trucking along, man. Keep investing, because the more research you do, the more understanding you get, you're going to know that you're doing the right thing. So with that being said, this week was crazy. Actually, the past few weeks was crazy. Like, we had record highs. We've been having record highs in the stock market for the past, I'm gonna say, past 3-4 months. It's been going crazy since the pandemic, right? But what happened is, this week, now everybody, all the economists, all the smart people was like, yo, the market is like, it's growing beyond control. It's like defying fundamentals, like technical analysis, and that's a whole nother conversation. Like, when you look at stocks, you can tell when something is overbought, oversold. Stocks have been overbought. Like, the valuations have been crazy. So they already said it's due for a pullback. Pullback meaning the stocks are going to come back down to where they should be, right? Based off their valuations. And it is just, you can't time the market, so they ain't know when it was coming. They just knew it was coming. Guess what? It happened this week. Stocks pulled back crazy, and you got some people that just don't know the nuances of the stock market, right? It's like when you got enough profit, you take your profits. You got to take your profits, right? Because the object is to buy low and sell high. You don't buy when something is at its all-time high, because you're setting yourself up for disappointment, right? So for people that didn't take their profits, this week was a bad week for them because stocks pulled back crazy. But on the other end of the spectrum, it represented a buying opportunity, right? Because when something drops down below a price that you bought it at, that means it's on sale. It's this little saying that's going around that's saying that the stock market is the only store that people run away from when it's a sale. Like when it's a sale at the mall, they tearing the doors off the frame. You feel me? But just because we've been left out of the loop of the stock market and how it works, I'm here to tell you, when stocks come down, it's a buying opportunity for these dope companies. Brother here on Instagram, and for my YouTube fam, I'm live on IG. You can feel free to follow IG, Rapping Dough, RAPPIN_DOUGH. So brother on here said, learn to date, not marry stocks. So yeah, you can't get attached to your investments. When you like I said, when you stuff them ran up crazy, you got to take your profits off the table and play with house money and invest that money in somewhere else where there's more upside. So yes, invest, but don't get attached to your investments. Definitely, you're on point with that. So they were saying that it's a lot of pent up consumer demand because everybody in the house, and it's crazy. I was saying this last week that it's crazy that everybody in the house. 40% of Americans are working from home, so people are not buying as many clothes, trying to look nice to go into the office, and all that. So I was wondering why Foot Locker earnings report was through the roof. Like, why was people buying sneakers? You couldn't go nowhere, right? So there's a lot of pent up demand. People are starting to buy and book flights and book cruises. So those are the stocks that have been beat up lately. So you might want to start looking into those kind of stocks, like that's going to favor the reopening of what's going on out here. So what else is going on? The jobs report came out Friday. Remember I told y'all economic indicators. One of the economic indicators is the jobs report. Comes out once a month. Came out Friday. They saying we got more jobs in the market. So when there's more jobs in the market, that means that raises the GDP, the gross domestic product. That means more products are going to be being made because there's more people working. So that's good for companies, that's good for business, and that's good for us as investors. So those are one of the economic indicators that came out this week. Got more jobs in the market. So yes, the tech sector sold off this week. People was taking profits as they should, and basically they set people up for a buying opportunity in the tech sector. What else we got here? Now, another thing that's been coming across my ears lately is that the stock market, I don't know about that stock market stuff, man. It's kind of like gambling. Now this is where I disagree with that. Investing is not gambling. It's only gambling unless you don't do no research. If you don't do no research and you just throwing money at stuff because somebody told you, this is a good stock, you're gambling because you don't know what you're investing in. How it's not gambling is, what you have to understand is companies' upper management, their CEOs, the CFOs, the COOs, their goal is to produce for its shareholders. What are shareholders? Us as investors. When we buy shares, we become shareholders. We're part owners of the business. So their goal is to produce for their shareholders. So when you're investing, that's one of the qualifiers when you're looking at dope companies. Make sure their management is good management. Make sure they have a good track record of bringing returns for their shareholders. That's basically when you see a company that increases their revenue, increases their earnings year after year after year, that's indicative of good management. So if you're investing in companies with good management that make sure their shareholders are benefiting, and you're using that as a benchmark, you're not gambling. You're not gambling because you looked at the management. Oh, okay, they make sure they produce for the shareholders. That's not gambling. What else? Like I said, knowing or seeing that the financial track record of a company. You see they're increasing their earnings, they're increasing their revenue every year. These are the type of companies that you want to invest in. So if you know the upper management is bringing returns for the investors, and this company has solid earnings over a set course of time, these are the companies that you want to invest in. So knowing that doesn't make this gambling. This is not gambling. Okay? So that's just one thing for any of my viewers that think or on the fence about investing and thinking it's like gambling. It's not gambling, it's investing, especially when you know those two things. So, moving on. My IG fam says, what are your thoughts about the splits with Tesla and Apple? And what do you look for when we are researching companies? Okay, I think I just went over that, but let me go over the split. What do I think about the split? I don't really think anything about the split. I know the split basically makes the stock more attractive to more people because it's cheaper. So Tesla did a 5-to-1 split, and their shares are $2,000 a piece. Everybody don't have $2,000 to buy a share. Definitely not 100 shares, because that's the typical benchmark. A lot of investors tend to use 100 shares. So I don't think the average person has $200,000 laying around, or 20,000, whatever that is. The math is with that. But when they did the split, it took the stock price from $2,000 to $400 a share. So that basically made it more attractive and more available, the stock more available to more people, because more people can afford $400 versus $2,000. And the same thing with Apple. It didn't raise the valuation, didn't lower the valuation. It's still the same company. It's just more shares are available now, and they're worth less. But anybody that had those shares have, instead of one share, now you have 5. But it's just like having $1 or 4 quarters. Same thing, it's still equal $1. And what do you look for when researching the company? I think without getting too complicated, look for good management. Find out who the CEO is and look at their financials. Make sure they don't have more than twice amount of debt than they do cash on hand. Anything more than 2 times the cash they have on hand is something funny with their money management. Something going on there. So if a company has more than twice their cash on hand as far as debt, you might want to pick another company. So what else we got here? Now, the term of the week. I think I kind of touched on this a couple episodes ago, but the term of the week is inflation. Inflation. No doubt, bro. So inflation is the term of the week, y'all. Inflation, right? Why is that the term of the week? I was just asking somebody, and you would think like we would know what this stuff means, but like I said, we've been left behind the 8 ball as far as this financial literacy is concerned. So here it goes. Inflation. Now, everything goes up on an average every year, 3%. Everything. Y'all remember back in the day when the box of Boston baked beans was 10 cent when we was kids? Now they 25 cent, 35 cent. So between then and now, it's been increasing 3% every year. And that's what happens with everything. Gas, draws, everything goes up 3% every year. But see what they've been teaching us, well, up until now, if you tune in to Rap and Dough, they've been telling us, save your money, right? That's how you do it, save your money. When actuality is, saving your money doesn't get you ahead out here, because the average interest they pay you on your money is not even a whole percent. It's actually 0.16% interest on your money. So if inflation is 3% and you saving your money to possibly live better down the road, if inflation is 3% and interest is 0.16%, every year you're going to be behind the 8 ball. You're going to be able to buy 2%, a little bit more than 2% less than what you was able to buy the year before, based off inflation. If you're just saving your money and not investing it, every year you're going to be 2% behind, or your money is going to be able to buy 2% less than what it would have been able to buy the year before. That's called inflation. Now, in order to outdo or out-earn inflation, we have to invest our money, not save it. Invest it. We need to put it to work, because on the average, the S&P averages between 8 and 10% return on your money every year. So if inflation is 3% and you earning 8 to 10% every year on your money, you out-earning inflation. This is how you create wealth. This is how they've been doing it since forever, over 100 years. This is how the rich get richer and the poor get poorer, because we think the poor think they're supposed to save their money, hold on to their money. No, you're supposed to be investing your money. This is how you out-earn inflation. You dig? So that's what we got, man. Any questions, man? That's what I got for y'all today, man. Any questions? So we went over how investing is not gambling. Investing is not gambling, contrary to popular belief. Dips in the market are opportunities to buy dope companies for a discount. Don't be the type of people that run away from the sale in the stock market, but run to Macy's when they have a sale. You know what I'm saying? So, yeah, investing is not gambling, and this is what we need to be doing. We need to be investing our money. So, what we got here? How do you determine what company you make a call or put option? Now, call or put options, for people that are unfamiliar with that is another way to play the stock market. It's another investing strategy, and those are called options. So, how do you determine what company you make a call or put option on? So, what I use is how do I determine? Well, I keep my ear to the street, Wall Street, that is. I keep my ear to the street as to what's going on in the world, right? And I look at the news, because if you look up a stock, there's news on every company. So I will read the sentiment. Remember when I said, you go back a few episodes, sentiment, the stock market moves off sentiment. Sentiment means how people feel about different things. So if people are optimistic or pessimistic, companies go up, or stock prices go up when there's optimism. Right now there's a lot of optimism with the stay-at-home stocks, stuff that's going to make people work or help people work from home, shop from home, right? There's a lot of optimism in that arena. Where there's pessimism is restaurants, right? people are still living in fear about going into closed places. So knowing the overall environment of what's going on in the business world, choosing a company, and reading the news. I read all the news. That's the work that you do, is reading. It's not physical work. It's a little bit of reading. Read the news. Dig in. The more news, the more information points you have, gives you a better chance at making the proper decision, whether you're going to do a put or a call. A put is thinking that the stock price is going to go down. A call is when you believe the stock price is going to go up. So, knowing the overall environment of what's going on, I'll see what's coming up on the calendar what companies are giving their earnings report on what day, and leading up to that, I'll be like, okay, there's a lot of pessimism going on in this arena, so I'm going to do a put. So I recommend you having a small watch list, because whatever's on your watch list, you're going to get news on whatever platform you're using. You're going to get news on these companies. So the more news you have, the better your decision is going to be. Another question outside of that, is timing a deciding factor too? Yes, timing is a deciding factor. The closer you get to an event, because stocks move on big events in news. I like to use earnings as my event. Other people use other news or big events as their events, because stocks move significantly up or down on good or bad news. So timing is key. So the closer you get to that event, the more expensive you're going to pay for that options contract. So yes, that's definitely a deciding factor. That's why you want to have a small watch list, so you don't get bombarded with so much information. You'll know what's going on in the particular companies that you're following, because you don't want to just be buying everything, right? You don't just want to be trying luck on everything. You want to actually know what's going on with these companies, so you can make a better informed decision. So if you've been following this company for a month and you've been getting all of their news, it's easy to get ahead of something. It's easy to get ahead of that high options premium if you know what's coming down the pipe, and looking at the charts and all that goes into the news, the timing, the chart, all that plays a part. The more information points you have, the better off your decision making will be. So yeah, make life easy on yourself, man. Don't have 30 things on your watch list. Narrow it down to companies that you know and that you've been following, so you'll have a better chance of making a better decision, because you've been following that company for months or weeks or whatever. You know what I'm saying? Good question. So what else you got for me? I'm gonna take about one or two more of them Jones, and then I'm gonna bounce on out of here. Yes, definitely decrease your watch list. Definitely do that. But yeah, so I think that should just about do it. Yep, okay, no doubt. Appreciate you tapping in. So until next week, tell a friend to tell a friend, man. Bring your questions. We're gonna be back at it next Sunday. So keep investing, keep running up the bag. Word, word, word. For sure, for sure. I might be in there next week. I might come show up next week for sure. But yo, yes. Appreciate y'all for tapping in. It's your boy Don Bucks. I'm out of here. Peace. Rapping dope, rapping dope, rapping